हर संडे की तरह आपके साथ जुड़ चुका हूँ। हम लोग अकाउंटिंग ऑडिटिंग इसके बारे में एक सीरीज कर रहे हैं जिसमें धनंजय गुखरी जी अपने साथ जुड़े हुए हैं और उनका जो पूर्वानुभव है ऑडिटिंग का और उसका हम फ़ायदा उठाना चाहते हैं। तो आज की इस वीडियो में जो प्रेजेंटेशन एंड डिस्क्लोजर नॉर्म्स आए हैं और जो की अकाउंटिंग स्टैंडर्ड्स है उसके बारे में हम लोग उनसे हमारे सवाल पूछेंगे। तो मेरा पहला सवाल सर आपसे ये है कि बीआर एक्ट पास होने के बाद में ये प्रेजेंटेशन एंड डिस्क्लोजर नॉर्म पहली बार आया जो कि शायद कमर्शियल बैंकों को था। नाउ दीज नॉर्म्स हैव बीन मेड मैंडेटरी। ऑफ कोर्स देयर आर एक्सक्लूजन्स फॉर द अर्बन कोऑपरेटिव बैंक्स, लेकिन ये जो सर्कुलर है इसके बारे में आपको क्या लगता है कि हम सही दिशा में अर्बन कोऑपरेटिव बैंक्स जा रही है या फिर इसमें तकलीफें बढ़ने वाली है? क्या लगता है आपको?
See, as far as disclosure norms are concerned, earlier also there were certain disclosure norms wherein there were certain disclosures categorically required to be disclosed by the cooperative banks. Now, what is the real purpose of disclosure norms is that it enables the reader or the user of the balance sheet to understand the financial statements in a better way. So, the purpose is not to disclose something which was not warranted for, but it's more to supplement your financial statement so that the reader can analyze your balance sheet statement in a better way. Now, the set of disclosure norms which have been published now or which have been mandated now, in most of the cases now commercial banks and cooperative banks are at par, barring few cases wherein certain norms are not applicable to the urban cooperative sector. Otherwise, most of the things are at par. It's in betterment of cooperative sector in the sense it will bring a transparency. Second important factor about disclosures, or I should say notes on accounts or anything which is attached to the balance sheet, is that once you have a standard set of disclosure norms, it gives a uniformity in disclosures across the banking sector. So when you want to compare bank A with bank B, you are dealing with the same disclosures. So because of uniformity, the reader of the balance sheet can judge it better. So that's the real crux of why it should be there.
सर इसके बारे में जो नोट्स ऑन अकाउंट्स हम देते हैं वो क्या देना अनिवार्य है या फिर उसका पर्पस क्या है? नोट्स ऑन अकाउंट्स में टिपिकली ईयर ऑन ईयर वही हम नोट्स देते हैं जिसके हिसाब से हम लोग हमारी बैलेंस शीट क्लोज करते हैं, तो उसका सिग्निफिकेंस फिर क्या है नोट्स ऑन अकाउंट्स के बारे में?
See, now if you talk about notes on accounts, typically notes on accounts plus it has to be, I should say, it should be combined with accounting policies also, and plus disclosure norms also as it is there. Means I will look at it in a combined way. Now, why notes on accounts or accounting policies are required is that it will give a set of information to the reader of the balance sheet or the user of the balance sheet, I should say, that which kind of accounting policies are followed. And notes on accounts are basically, if you read any balance sheet or P&L, they are always supposed to be read along with notes on accounts. So you can say it's a kind of a clarificatory or a supplementary information as to how the balance sheet and P&L is drawn, and even cash flow for that matter. So that gives an insight for the reader as to what is the basis of preparation of the financial statement, and the accounting policies aligned with that, and along with that now disclosure norms are also there which go beyond that.
Okay, before we talk about the key accounting standards, एक सवाल जो सेक्टर में पूरी तरह से घूम रहा है and the people are asking the same question again and again, that is about the third schedule of BR Act कि वही हमें बैलेंस शीट वर्टिकल करना है, हॉरिजॉन्टल करना है। पहले तो ये हॉरिजॉन्टल वर्टिकल क्या है और एक्चुअली बैंकों ने किस फॉर्मेट में करनी चाहिए, ये क्लैरिटी हम देना चाहते हैं।
See, as far as this disclosure norm circular is concerned, that circular has reproduced what is there in the BR Act. There is nothing new in that as far as format is concerned. So for scheduled commercial bank, it's a vertical format which was in existence even prior to this disclosure norm. There is no change in that because BR Act has already prescribed the format that cannot be changed by way of a circular. So what RBI can do as a regulator is give additional points for disclosure. Format remains same. Having said that, as far as the cooperative sectors are concerned, urban cooperative banks are having section 56 wherein there is a categoric mention about which format a cooperative bank should follow, which is a horizontal format and not a vertical format. That scenario remains same even after the disclosure norms are published, and in fact in second or third para of the circular, they already made it very clear that the vertical format which is given in the annexure, that is not applicable to urban cooperative bank. So there is no ambiguity in the circular.
So you should continue to go for a horizontal format which exists.
That's right.
आपको वर्टिकल फॉर्मेट से दिमाग लड़ाने की जरूरत नहीं है, तो वो आपको करने की जरूरत नहीं है। सर ये जो सर्कुलर आया है इसमें ना कुछ चीज़ें ऐसी हैं जो आई डोंट नो वो की अकाउंटिंग स्टैंडर्ड में कवर नहीं होती है। जैसे कि उन्होंने एक पैराग्राफ दिया है जिसमें वो कहते हैं कि इफ़ यू डू विंडो ड्रेसिंग यू विल बी सीरियसली पनिश्ड। Now banks clearly do not have a vision as to what kind of activity will be treated as window dressing. कौन सा ट्रांजैक्शन आप करोगे जिसको विंडो ड्रेसिंग के तहत गिना जाएगा और आपको पिनलाइज किया जाएगा। तो कंसेप्ट ऑफ विंडो ड्रेसिंग एंड व्हाट बैंक शुड अवॉइड, if you can throw some light on that, that will be beneficial to the
So
banks.
as far as window dressing is concerned, it's a concept wherein bank tries to inflate its balance sheet size. So typically, suppose advances and deposits both are incremented uh, with a reason as to it's a kind of a forced thing and not a customer centric thing. Just to give you an example, suppose a bank finds out that there are certain CC accounts which are underutilized, and using that, if the bank creates deposits out of that, typically that's
हाँ,
a
उसको
loose
बोलना कि तू
definition.
ड्रॉ कर लिमिट और तेरे सेविंग अकाउंट में जमा करके रख
Now,
दे।
correct. Now the real challenge over there about proving a window dressing is that one has to prove without ambiguity that it was an act which was not initiated by the customer. Now there is a subjectivity which is involved in that.
No, this will be initiated by the customer, no?
Exactly.
Where the banker will not be a
I
party
agree.
to that.
I agree. Now the challenge as far as this window dressing is concerned, it's very difficult to prove that a particular act is a window dressing. So what is usually done is to find out that whether the window dressing has occurred or not. Usually from auditor's angle, one is supposed to go through the balance sheet and P&L size, maybe for a staggered period. Like say, suppose I'm doing audit for March end, I shouldn't be only looking at the financials of March end. I should be looking at financials prior to that, maybe February end or mid March. And later on, when I conclude my audit, I need to also see that what is the position of balance sheet, maybe on 8th or 15th of April. Now, what typically might happen is if there is a skewing of deposits as well as advances only in the intervening period, like let's say only that 6 or 7 days are there, wherein on 20th March skewing starts, 5th of April it gets down. Now, such kind of scenario, if it is common across the year, like for example, if you have a CC account who is habitual to park his some of his portion in a separate FD account, kind of a earmarking of funds, throughout the year you can see his habit, you cannot call it as a window dressing. But otherwise, why a particular
Suddenly he does
customer?
it in the last
Because
week of March.
he might be charged an interest of maybe say 10% or 12%, and deposit short-term deposit is getting say 3% or 4%. So in that particular case, that particular borrower will never act in such fashion wherein he is getting a loss of say 6% or 7% per annum. So one has to look at it critically. One has to be vigilant, and just to put it in other words, whenever you are checking about this concept of window dressing, you should have professional skepticism alive. You cannot presume that everything is customer centric or customer initiated. So you need to look at that with a open eye and ear, and not with a prejudiced mind that it should be always a window dressing. So one has to prove that actually beyond doubt. You need to ask the reasons as to why this is done.
Should we conclude that somewhere in the month of March, first week, a bank comes out with a deposit scheme
Yeah.
for a shorter duration,
Yeah.
mobilizes deposits,
Yeah.
and after shorter duration, say after 90 days,
Yeah.
deposit is withdrawn or is parked elsewhere.
Yeah.
Will this action of mobilizing deposit in the last month of March will be treated as window dressing?
Not really, because it's a scheme which was open for all. So you are not making use of your customers or borrowers per se. Because typically when you do a window dressing, you in the sense the banker makes undue use of the borrowers. Otherwise, if it is an open scheme, 90 days, 30 days, 44 days, whatever it is, it's not a window dressing per se. It's open for all.
This circular again contains one particular concept about the blocked accounts. That is, inter-office accounts are required to be blocked and nobody is authorized to debit. I mean, why this has come suddenly? This concept is not known to the urban cooperative banks, blocked accounts.
See, as far as these inter-office accounts are concerned, or loosely I will say that office accounts, to be more precise.
It is syndicators and syndidators.
Yeah. Over the period, actually, there are multiple instances are there wherein these accounts are misused. In the sense, they are used as a parking account. So, suppose a particular person wants to draw a particular amount from the bank, typically a bank employee, he can just hit that particular account, office account. So office account is debited, amount is withdrawn, at the year end it is nullified. So there are n number of misuses which were done for office accounts. When we talk about inter-office per se, RBI guidelines were existed prior to this circular also, and which have remained same. It talks about making a provision for inter-office, or for that matter any office account. So what the guidelines are saying, and which is a kind of a prudent accounting practice, is when you talk about receivables, that is a debit balance, you need to have a certainty for receivable. If you don't have certainty for receivable, you need to make a provision for that. Now, as far as banks are concerned, when we are talking about interbank or interbranch accounting, whichever credit entries are there, which are not yet reconciled and which are outstanding for above 5 years, there is already a RBI guideline is there for NDTL calculation, wherein those are freeze. So those are considered as gross liability without netting off. Rest of the things are always netted off. Now, what it really means is that any credit entries which are outstanding less than 5 years, you can net it off against the debit entry. That's what it appears. But in reality, you have to take a different view. The reality is that if you are having both entries which are reconciled, you cannot presume that it will be always netted off, because both are standalone and both are altogether different. So you need to look at those debit entries separately. It might happen that out of debit entry, a partial credit entry is there, so it's not knocked off. To that extent, reduction of debit balance is fine. But otherwise, if you're having an open debit balance in any of the office account, for which you don't have any explanation, so beyond the point you need to provide that, and beyond the point according to B is 90 days, because if you have some receivable beyond 90 days, you have already IRAC norms which talks about assets, which doesn't talk about advances. So when you say NPA, it talks about non-performing assets and not non-performing advances. So I can always say that any amount which is receivable, wherever it is parked, if it is not recovered within 90 days, unless there is a justifiable
You mean
reason.
to say that all types of assets are covered under these guidelines?
Yeah.
All types of assets.
Other than the assets wherein RBI is having a separate guideline, let's say investments.
Yeah.
Guidelines are
Separate
separate.
guidelines.
Fixed asset, there is an accounting standard about impairment and other things.
So you mean to say that if inter-office account shows a debit balance over 90 days, that requires a provision?
Yeah. In fact, not only net balance, I will say on gross balance. Because netting off, when you can justify that, wherein there is an element of that open debit entry is there in that credit entry. If they are altogether different,
the term 90 days will be applicable if it is, say, debit balance that has occurred in the month of March.
Correct.
So you still have 90 days to close it off or whatever.
But then again, one has to look at it technically, that what is the nature of that? Is it likely to be recoverable? If one sees that it's an advance against which expense has already occurred, only accounting has not happened, because many times it happens that there is an advance but the expense is not accounted for. One has to look at that critically.
Do you think this inter-branch provisioning has been introduced recently? It was not earlier applicable to urban cooperative banks.
It was very much applicable. The reason being it's asset. So no one has said that provision shouldn't be made. There was, see, it's like if you have open items in interbranch, ideally what was expected from the bankers and also the auditors or any stakeholder, I should say, one has to analyze one has to do age-wise analysis for debit as well as credit entries.
You said one thing about the confirmation of recoveries. Correct. In respect of debit balance. A period of 90 days has passed.
Correct.
Already. But the bank has a confirmation that it will get money. What bank should be doing?
See, when I'm saying confirmation, the word I was using was certainty.
Certainty.
It's not about confirmation.
Yeah.
Because one can give me a confirmation that, okay, amount is due to you. Like in NP account also confirmation can be opted. But it doesn't mean that there is a certainty. So one had to look at that critically.
From the certainty point of view.
Exactly. Second thing is that there might be
certain receivables. But then it will be very subjective. And who will take this call, whether the auditor or the banker?
Initially, the banker has to take a call and then the auditor. Rather, bank should be able to represent before the auditor as to why bank is feeling that this amount is recoverable.
Okay.
So they have to demonstrate the recoverability of that.
Okay, focusing on the same circular, would like you to enlighten us on a couple of accounting standards which are very critical and which are very important. One of the popular concept that was running around the urban cooperative banks and still running around is that कि अकाउंट एनपीए हो गया 31 मार्च को, 10 अप्रैल को उसका रिकवरी आ गया तो उसको पीए करो. And they used to take, I mean still they are taking a defense that this is a prior period item and therefore we are upgrading the account as of 31st of March because audit takes time till 31st of May, and any recoveries for the account which has been classified as NPA as on 31st of March, there have been host of articles and there are a host of views. Based on this presentation and disclosure norms, what do you feel this accounting standard 5 tells you about, and what banks should be doing?
Yeah, I will just make a small correction here. Uh, the case which you gave was about events occurring after the date of balance sheet,
Yeah.
and prior period is slightly different. So
Yeah.
we'll deal both, leaving aside accounting standard number because it doesn't really matter. The case which you were referring about, account is NP on 31st March, and on say 10th of April it is regularized or maybe closed also. We'll take an extreme case. RBI has already mandated all the banks that NPA marking has to be a day-to-day affair. In the sense, at every end of the day, every account will get tested, and based on that, the classification will happen. Now, once bank is admitting that they are going by this norm, even if the account gets closed on 10th of April, there is no scope for bank to say that it was closable on 31st March. So it remains NPA. Second thing is that even when day-to-day marking was not there, recovery on 10th of April is not an event occurring after the date of balance sheet. The reason being, what is called as event occurring after the date of balance sheet is, there has to be certain things which have already occurred on 31st March, but the impact is not known on 31st March, and the impact is known later on. Classic case might be, say, there is a fire in some premises and there is a loss which is not assessed on 31st March, but the fire has took place, that incident has taken place on 31st March. So the assessment is done on 10th of April. So such effects are always taken. Another example is that maybe valuation you might have done later on, but which is as on 31st March. So the report is dated 5th of April, but that is related to the valuation on 31st of March. These are events occurring after the date of balance sheet, which wherein the impact can be taken in balance sheet. Talking about prior period items will be those which have occurred in earlier year, but which were not accounted for. So typical case might be, say, provision which was not made in earlier days. So maybe electricity expenses payable, which was not made earlier, and you have paid March bill in the month of April. So this is a prior period item. But again, coming back to the point, as far as NPAs are concerned, or anything related to assets is concerned, especially about recoverability or recovery of that, even though one can argue that I am proving that there is a certainty. But let's come to that point also. We were talking about interbranch and other assets which are receivable. What one can demonstrate is that when bank wants to demonstrate that whether a particular amount is recoverable or not, the fact that on 10th of April it is recovered, bank can substantiate that it is recoverable. But NPA norms are different than recoverability.
I understand.
So whenever it is recovered, you can book that recovery. Prior to that, if there is an ambiguity, like suppose it is below 90 days, and there is a provision which is warranted for an amount which is lying in office account, but that is recovered on say 10th of April, bank can say that you don't have to make a provision because your 90 days are not over. It can demonstrate you that it is recoverable. It's only to substantiate that. But as far as NPA norms are concerned, this substantiation is not there because it's a clear-cut norm.
Okay. Taking the point straight away to accounting standard 9, that is revenue recognition. Yeah. Whether these are mixed or this is an independent accounting standard?
All these are in a way interlinked with each other. Typically, revenue recognition talks about your credit side of your P&L account. There are certain basic fundamental principles are there related to revenue. Revenue can be of any form, be it be locker rent, interest, processing fees, bank charges, profit on sale of securities, interest booking, everything. Everything is covered. Typically, that's why I said it's the credit side of your P&L account. Revenue recognition standard gives you a basis as to how you should recognize the revenue. So the basic principle is naturally of accrual principle. So it's a time related thing. So when you're talking about financial statement of say 20 to 23, revenue related to 1st April 2022 till 31st March 2023 is supposed to be recognized. At times, banks might resort to a revenue recognition policy wherein accrual basis is not followed and cash basis is followed. Now, accounting standard per se doesn't permit mixed accounting concept also. So you have to be either cash or accrual, and for banks, only accrual is mandated. When we talk about accrual concept, at times, prima facie, it might look like you are following a cash basis, but in reality, it might be accrual. I will give you a couple of examples of that. Now, loosely, when we talk about NPA, what we talk in general parlance is that whenever the interest is realized, we book that income. So it's a cash basis of accounting which we follow, which is not true. Because the revenue recognition concept also talks about certainty of receipt. So for NPA accounts, when I'm marking an account as non-performing, or it's a bad debt, or it's a bad receivable for me, I'm not certain about receipt of income against that. So I'm still following accrual principle. There is no deviation from accrual principle. I'm not deviating from that. Whenever there is a certainty, I will book that entry. Now, for NP
So
accounts,
whenever you recover
whenever
the
I recover.
cash,
So
you
cash basis of accounting is not a concept in NP. It is still accrual. It's a realization concept. A slight change between, or a slight difference between cash and realization
marginal
concept.
difference is
Yeah.
there.
Secondly, if you talk about say bank guarantee commission or LC commission. Now BG and LC commission typically, if the bank is recovering upfront for the entire tenure, and later on bank doesn't have a policy to refund that amount back to the that particular customer. Like say BG is for 3 years. After 2 years, the BG gets cancelled, and you have collected say 3,000 rupees. So you are not going to give him back 1,000 rupee. That's why 3,000 are already accrued to you, and you account for that as income. If you go into staggering that,
Do you need to do that apportionment of that 3,000
yeah,
rupees?
that is not really required, and it's always a subjective concept in other terms. One can say that I will stagger that over the period because that's the risk which I am carrying as a contingent liability over 3
Right.
years. But if you carry that logic, then you have to carry the same logic to the processing fees also. Like say for term loan,
Yeah.
if you are giving a housing loan
10
and
years.
say 10 years, you won't stagger that over 10 years. So you need to account for that as and when it is received, unless and until you have a clause wherein refund is possible. So suppose you have a clause that LCBG, if it is cancelled, you are going to refund it back. Then it's not accrued to you. It is yet to accrue to you. Then you have to stagger it. Otherwise not.
Otherwise not. Okay.
Same way, just to add actually,
Yeah.
as far as locker rents are concerned, many banks resort to a practice that locker rent is accounted for on cash basis. It's a common practice in many banks. But recently there was a circular issued by GST department which talks about GST applicability on locker rent on an accrual basis. So for these banks, they need to have a separate calculation done for GST liability. So your accounts and
The
GST
banks are
liability will
not doing
mismatch.
that because banks are still not well versed with the GST impact, and
Exactly.
they need to really
Yeah.
look for this
But
GST
otherwise, locker rent
calculations.
will become a kind of a mixed practice wherein it's a cash basis.
Yeah.
Going a little further, actually, the taxation authorities can tell you, since you're following the accrual system, any income which accrues to you, you have to offer to the tax.
Okay.
And locker rent is one of them. Unless and
Right.
until you say that is locker rent is not receivable, and you have initiated the recovery process, then the same logic will apply, uncertainty of income. But otherwise, it should be booked.
Okay. Then what about accounting standard 10? That is fixed assets.
Yeah.
How do you explain that accounting standard?
So as far as accounting standard 10 is concerned, earlier it was AS6 and AS10, that is depreciation and fixed asset were different, and now it is combined. It talks about accounting of fixed asset as to from which date you have to charge the depreciation on that, how you should charge. Now, if you talk about urban cooperative banks per se don't have any prescribed rate of depreciation under any act, whether it is a state act or whether it is
The
a
income tax
central act.
provides the rates, no?
Income tax talks about provision of depreciation for income tax purpose. They don't
They
talk
don't
about,
talk about
yeah.
it.
So it's
Okay.
a for altogether different thing. So what typically the banks, many banks are doing, they are adopting the rate of interest of income tax, which technically I will say that it's not a prudent practice. I will tell you the reason for that. Ideally, when you talk about AS10, that is fixed asset accounting and depreciation, if you go into logical part of that, you are charging off your fixed asset to your P&L account in the form of depreciation.
Right.
Now, there the concept is that what is the expected life of that particular asset, or maybe a class of asset for convenience purpose, because you cannot drill down to individual asset and assess the life. So maybe a bank will say that for furniture it is say for 10 years, building it is say for 40 years, whatever it is. Or building it might be a case to case basis because building structure may differ. But for others it's a fair estimate which one can draw. That is the scientific and prudent way to do that. Using income tax rate is a convenience. It doesn't have any basis. The reason being income tax nowhere says that it is based on life of your asset. It
Okay.
doesn't talk about that. Unlike that, Companies Act is providing that portion wherein they have given a standard benchmark for particular years as a kind of a, you can say, a basis for starting it off. But at the same time, in Companies Act also talks about that the companies are free to assess the usable life and stagger it over a useful life. So the methods are different. If a bank wants to adopt that Companies Act methodology, they're free to do that. My personal view is that one shouldn't be going blindly as per the Income Tax Act because it may not give you a justifiable ground. So if you are adopting the Income Tax Act, it's better that you minimize that you are agreeing with the useful life of that particular asset. Now another point is that income tax talks about only WDV method. There is no mandatory part, either in accounting standard or RBI regulatory norms that it has to be always on WDV method. One can go on SLM also. So you have to decide as a banker as to which method you want to follow, and it has to be backed by a scientific method, in the sense useful life or something of that sort. Now once you do that, then AS10 talks about certain things. It talks about certain additional factors, that suppose your estimated useful life of say 10 years. Later on you realize that the life of asset is going to be only 7 years. You need to make that adjustment in your accounts, which is again logical, because now your estimation has been undergone a change. It can be either way. It's not only reduction, it can be incremental also, especially about buildings. One more thing which is prescribed in AS10 is about revaluation. So many times the immovable properties are revalued. So whenever the revaluation occurs, there is a revaluation reserve which is created, which appears on the liability side, and the fixed asset values are increased to that extent. Now as per the new norms, now practically new norms have again become old norms. So the present scenario in that is revaluation reserve amount will also be proportionately taken to general reserve. That is the concept. So let me give a simple example. Suppose say 10 rupees is my asset value and say 10% is my depreciation by SLM method. So ideally I will be charging 1 rupee every year with respect to that asset. I have revalued that asset and now the value is 100 rupees. So 90 rupees is liability as a revaluation reserve and 100 rupees is my fixed asset. I will apply 10% on 100 rupees. So 100 out of that 10%, that is 10 rupees will go to P&L account debit side. Similarly, 10% will be carved out of revaluation reserve and they will go to general reserve. They will not come to P&L account. So because of revaluation, incremental value in fixed asset, that will have a direct hit on your P&L account. So that's how the impact will be there on the revaluation, which is clearly given in AS10. So that's the crux of AS10.
Now, I mean, the linkage for this is that does this attract the revaluation reserve norm which has been revised now, wherein the Reserve Bank of India said that considering the revaluation reserve into Tier 1 capital, you can do it from 31st of March.
Yeah.
Although this topic I wanted to discuss in some other areas, but then since the topic has been opened up, what is your view on this? Whether the revaluation reserve norms applicable from 31st of March will be beneficial because they have moved the date behind.
23, yeah.
They have moved the date behind.
Right.
It would mean that the banks will be able to do revaluation as on 31st of March and create it and take advantage for Tier 1.
Correct.
Will they be wrong if they do that as a strategy?
No, they can do that. Only they need to keep one thing in mind. Ultimately, it will have an impact
On
to that
P&L.
incremental depreciation
Incremental
on P&L.
depreciation.
But
That is
apart
true.
from that, to improvise capital adequacy, why not? Means they can always go for that.
There is one more question that bothers bankers is this, that there are percentages prescribed in some or the other law, whether it is income tax or otherwise. They are always confused as to depreciation on software, where the Reserve Bank of India has stipulated that any software or hardware which you buy, you have to depreciate within a period of 3 years because the life is short.
Yeah.
Here are the banks which are using the data centers, which is completely written off from the books because of the 3 years contention. Now, this 3-year contention is RBI guidelines.
Right.
3-year contention is not a guideline anywhere, but the income tax authorities have been accepting the depreciation value on your hardware or software. Connected to this, there is an accounting standard which talks about AS26,
Yep.
intangible assets. Now, these two are intertwined.
Yep.
So, combined with AS10 and AS26, intangible assets, software is always an intangible asset. How do you explain the combination of both?
Yeah, actually, AS26 talks about intangible assets, and if we talk about typical intangible asset, which is there in almost all the banks, it's a software. In software, you have to distinguish the software into two parts, or two types, I should say. One type is that if the software is essential to run the hardware of a particular system, then that is presumed to be an integral part of that hardware.
Okay.
You cannot isolate and take it away.
Okay.
All other softwares, which are there, which are not required to use a machine or to run a machine, Those are
So typically
intangibles.
classify them into front end and back end.
Probably. Again, I will differ on one point in that operating system, it's a technical issue as to whether it is necessary to run a machine or not. The answer is no, because operating system, multiple operating systems are there. So you are using it in a customized way. It's not that only Windows should be used or only open systems are required to be used. You have parallel choices. So it doesn't fulfill the condition of essentiality of running a machine in 100% way. But leaving that aside, because that amounts are comparatively immaterial, the real amount are related to CBS or maybe your other softwares, productive softwares. The intangible accounting standard, what it talks about is, whenever there is an intangible, maybe in the form of software asset, it talks about at length actually about the absolence of that
Okay.
particular asset.
Okay. Okay.
And there it is already prescribed. Number of years are also stated between 3 to 5 years. On the conservative side, it's again harped on that the softwares are becoming redundant. So you need to write it off as quickly as possible. Other intangibles which are there, which are talked about in that particular section or that particular accounting standard, typically they won't really apply to the bank. But still, I will talk about few of them. If you remember, maybe a decade back or maybe 2 decades back, I should say.
I'll just
Yeah,
interrupt and would like you to elaborate on
yeah,
that, because this particular accounting standard in the guidelines says that
yeah,
unless your intangibles are completely provided or written off, you cannot declare dividend without the permission of central
yeah,
government.
yeah,
That's where bugging the
yeah.
urban cooperative banks. Please throw light on that idea
I will
also.
come to that intangible part. See, there RBI is not really hinting at softwares or normal intangible asset, because then no bank will be able to declare the dividend
Mm.
unless they write off in 100% way. So
Mm.
if you followed the accounting standard, it's more than sufficient. But let me talk about examples wherein intangibles might exist and the banks are not writing it off. So let me give a couple of examples. Actually, when this accounting standard came into picture, the earlier practices were discontinued. So let me talk about the classic practice which already existed. If you remember, as per the traditional accounting, if someone is spending heavily on advertisement, that corporate or that entity used to say that I have spent say 1 crore, which will have impact for say next 4 years. That's a huge budget which I have spent. So they used to defer that. It was called as deferred expenditure. That concept itself has come to an end. Another example
Okay.
of intangible I can say is, so the finer line is that prepaid expense is different and deferred expenses are different.
Mm.
So deferred expenses someone is carrying out, you shouldn't be declaring the dividend.
Yeah.
But let me talk about another intangible where the question will arise about this norm. Suppose a bank has acquired another bank, so it's a goodwill, which the bank has indirectly acquired in technical terms as per AS 14, that is amalgamation and mergers. So what really happens is if I acquire another entity, wherein there is a mismatch between liability and assets. So liabilities are more than assets, so the differential is goodwill, which I will stagger over the period and I will write it off. Now here also this particular condition will not be invoked unless and until a bank doesn't follow the RBI guidelines and this accounting standard. RBI guidelines are categorical about how you have to stagger it over the remaining period. Earlier it was 5 years, then it again certain cases RBI might give you a dispensation also.
Mm.
So if you follow that, it's a compliance. So then the guideline about non-declaration of dividend because you are having the intangible in balance sheet won't really apply. So one has to take it in true spirit that there is something which you are not even supposed to defer, and you are deferring it and saying that it's intangible. Or
Mm-hmm.
I will give another example. If someone, a bank has created a brand valuation of its own, say XYZ bank says that XYZ brand is having say 10 crore as a value. So brand value is there in your intangible. You
Mm.
cannot have that as an intangible. So you have to
Okay.
write, means that should not exist.
Should
So
not
this accounting
exist.
standard is harping on that. Again, the question is same which we talk about in earlier part also. It's more about whether it is realizable or not, whether it is still carrying a value, uh, whether it can still give you a value out of that asset. So like when you are talking about software also, it might happen that in next 1 year time, if the software has become redundant, you cannot defer it for 3 years to write
You
it
have to
off.
do it then and there itself.
Exactly, because technology might change, your assets are no more in use, you have to simply write it off. It's not that you have to stagger it.
Okay.
But for other entities, the rights can be like say, which is not applicable to bank. Suppose someone has created rights in a particular property or a project. There, that intangible accounting standard is really coming into play. it's not really applicable for banks in a broader way. It has only limited ramification.
There are three more accounting standards which I would like you to throw a light upon and clear the cobwebs which exist in the urban cooperative bankers. One is accounting standard 15.
Mhm.
I would like you to elaborate from two perspectives. One is bank is very small and has not opted for any kind of policy for employee benefits, whether it is gratuity or leave encashment. Bank is very big. It has obtained the policy of a recognized insurance company, whether it is LIC or anybody else, somebody on that. Typically, the IRAC norms prescribe that the employee liabilities are required to be calculated on actuarial basis and then to be provided for. What bank should be doing in this case, and how bank should adhere to this particular condition?
So as far as
Because let me finish. Because there are several imponderables in the computation of this liability. One is discount rate, the other is attrition rate, salary escalation. These three, four rates decide the value of liability.
right,
So, without prescription of any rationale, banks are doing whatever that comes to their mind. For example, they may say that my attrition rate is 0, my salary escalation is 2%. All these things are possible, wherever which can impact the computation of the liability which is required to be provided.
Yeah.
Here is the technical thing which requires a different understanding. A bank is small. I have created a provision for all 15 employees. Suppose there are 15 employees. Provision exists. ये 15 लोग जब तक रिटायर होने वाले उनके रिटायरमेंट का पैसा मेरे पास पड़ा हुआ है, फिर भी ये प्रोविजन करना पड़ेगा. हाउ इज दैट? द क्वेश्चन दैट हैज कम फ्रॉम स्मॉलर बैंक इज दिस, तुम हमको ये करने को बोल रहे हो, जितने लोग रिटायर होने वाले हैं आगे के 10 साल में सबका पैसा हमारा तैयार है, हमने स्टेट बैंक में एफडी में रख दिया है. तो शुड वी स्टिल नीड टू डू दिस? बिकॉज कैन वी सैटिस्फाई द ऑडिटर एज वेल एज रिजर्व बैंक ऑफ इंडिया कि जो वैल्यूएशन आ रहा है उसका पैसा हमारा पड़ा हुआ है, हमको कोई इंश्योरेंस पॉलिसी लेने की जरूरत नहीं है.
See, first thing is that this accounting standard 15 doesn't talk about obtaining an insurance policy. It talks about making a provision, and that's the end of it. The latter part is what the bank has chosen to do. Now, what this accounting standard talks about? It talks about short-term and long-term benefits, to be precise. Short-term benefits, simple example is PF, ESIC. These are short-term employee benefits, which are then and there paid. Because immediately they are due and those are paid. Gratuity and leave encashment or superannuation, to be using a generic word, these are the examples wherein the liability will not arise instantly. It will arise at the time of retirement or resignation, not before that. Now, what the accounting standard talks about is you have to make a provision based on actuarial basis. Even the accounting standard says the same thing. Now, the actuarial basis, without getting into details of that, what it really means is there will be always a difference between actual and actuarial. In the sense, not all your employees are going to retire on day one. They might be returning in a staggered manner, maybe over the next 25 years or 20 years, or someone might retire instantly also. So, if you do an actual provision, you will be making a provision presuming that today all employees are leaving, and that's the actual provision. Actual provision will be required only when there is no continuity of the bank. In the sense, for example,
going concern ceases to
precisely.
exist.
So, in case of merger, actually, that concept will be applied because now the bank is ceased to exist, or maybe in the case of liquidation, you know that it's going to be the actual liability, you need to deviate from that. From a normal perspective, that is a going concern perspective, the actual valuation methodology is required to be obtained. Now, the confusion between actuarial valuation basis and actual valuation, because RBI circular talks about the basis should be actuarial, then they nowhere talk about whether the actuary valuation has to be obtained or not. At the same time, accounting standard also doesn't talk about obtaining a certificate. It also harps about the method of actuarial valuation, which are prescribed in that accounting standard. One should not deviate from that. Now, in these cases, as you rightly said, there are a couple of factors like attrition rate, salary increase rate, the legacy of the bank about how the employees are retiring or maybe resigning. All these factors are contributing to that. Now, when you talk about any insurance company which provides you the details of basis, for funding, because what they do is they match the actuarial valuation and they say that you match the funding for that. So, they are kind of custodian of your assets. Now, in that case, what really happens is the table which they provide you, at times that might be based on the information which you are passing on to them. It may not be based on the information which one will, acquire if one is a actuary. Just to give you an example, ideally what they need to acquire is maybe last 20 years data to understand that what is the pattern of your salary growth, what is the pattern of your employee resigning, and what is
That
the
never
age and other
happens
things. Yeah.
really.
What is typically given is only date of birth,
Current
age of
year.
retirement,
Yeah.
current salary.
Current salary.
Banks provide that what is the expected rate of increment.
Right.
There is no basis, there is no legacy percentage which is marked.
Yeah.
Now, in that case, the biggest challenge is that can we really say that it's actual valuation or not? Because what is all the insurance companies are doing, at the end they say that this is not actual valuation for the simple reason that they cannot be actuary. Company cannot be actuary. The real actuary can only give you a valuation certificate. Basis is still followed by them is actuarial basis only. But it's a half truth actually.
It's
It's
little
neither
dicey.
yeah,
It's little dicey.
it's based on a basic
That the input that the
like
bank gives, no? End of the day.
exactly. Now coming to the audit side, what the auditor can do from auditor's perspective, if he is not ready to rely on this particular evidence, see ultimately he has a choice. And as it is already always said that we need to apply as auditor professional skepticism in that. Professional skepticism means I cannot believe that everything is true. It has a corollary also that I should not be always saying that everything is false. So I have to be diligent. If I feel that this is not correct, I can engage actually on my own, which is called as experts. I can engage expert for that. Now, when I'm engaging expert, which is technically called as accountant's expert or auditor's expert, I will ask him to do this valuation on an independent basis, and that I will use for my audit techniques. Same way, management can also involve actually, that is called as management's expert, and do a valuation. But it's very likely to happen that the valuation which is done by life insurance company, it's very likely that it will vary from what the actuary will do, because actuary will ask you n number of things which insurance companies have never asked you for that. Now coming back to your original question, if a particular bank doesn't want to take that policy, and if they are having sufficient cushion in investment, that is perfectly permitted. They have to earmark it and say that
You have
these
to
are only
provide
for
the
retirement.
data कि ये मेरे पास है,
Yeah.
तो मुझे ये
Because
लेने की
accounting
जरूरत नहीं है.
standard will never talk about you have to make mandatory funding for that.
Yeah.
So you can make a provision. But for income tax allowability purpose, many times the gratuity funds are created so that you claim that. If you have funds
You
with your
claim
own,
deduction over there.
yeah, means it's not a trust. You are just holding that in your balance sheet, so there is no benefit.
Then there is accounting section 28, accounting standard 28, impairment of assets. How this is applicable other than the IRAC norms which are issued by Reserve Bank of India? Impairment of asset would mean entire asset side of the balance sheet, is how I believe.
Correct.
For advances, for investment, the impairment guidance is there. And for all other things, now they have provided interbranch debit, they want you to provide and all that. And how do you interpret this for the entire asset size of the bank?
See, impairment, usually this is more akin to fixed assets, even though it applies to all assets. So for fixed assets, just an example, suppose you have procured, say, a car, and the depreciation is staggered over, say, next 7 years. I'm just taking a hypothetical example. After 3 years, the car has become unusable for whatever reasons. It's not usable. Maybe spare parts are not there, so it's just lying there. So it means that it has impaired because it is no more having any useful life. So then you have to make 100% provision, which is the impairment provision which you are making, which is different from depreciation. Even though it looks like it's a depreciation provision, it's more of making a provision for all the assets which cannot be used, which are impaired, which are not usable. It can be anything and everything. So suppose you are having, say, a cash vault, having a net book value of, say, 10 lakhs, but now it is not usable because the lock is not functioning, for example, and it is not repairable. So you cannot carry that value because it is no more of use. So that's where the accounting standard will get invoked.
So all assets, wherever the IRAC and all other norms are applicable, this standard becomes
it's
applicable.
Typically about tangible assets actually.
Tangible
it's not
assets
about intangible, because
bank.
intangible is more about recovery. So IRAC is taking care of that.
So similarly, same corollary can be extended to other assets where the NBAs have been acquired and fixed properties are there. Will this section be applied?
Because their impairment might happen. You acquired a building as a non-banking asset, and suppose there is a claim or attachment or
then the provision will be.
Yeah, because you don't have assets, it has already impaired.
It's not a clean asset.
Exactly. So whether you call it impairment or whether you call it lesser valuation which has occurred because of encroachment, meaning is same. But suppose the building has collapsed, it's impairment, so you don't have any value for that.
The last question in this today's session is about one of the most grossly misunderstood concept, misused also at times, DTA and DTA, direct tax assets, or the liabilities. Banks do get benefits and banks do get hit. It's either way. When this has to be created, when this has to be accounted for, when this has to be ignored, and how this can be created are the four segments wherein I would like you to respond.
Yeah. So we will first understand the basic concept of DTA detail as to when it is created, because it's a kind of a virtual asset and virtual liability, or I should say intangible asset, intangible liability. When it occurs is whenever you are having a difference in your taxable profit and book profit. Book profit is your net profit. Taxable profit is the amount which you offer to tax. Now there are multiple reasons for that difference in these two values. We need to bifurcate those differences into two types. One is reversible and one is permanent. Now what is permanent kind of a difference is, suppose for example, you have certain expenses which are debited in your P&L account which are not related to your business. Even though I'm just taking a hypothetical case, so it is permanently disallowed. Later on, even if you pay, it is not allowable. So whenever you hit to that, there is no reversibility of that. As against that, or I will give another example, like say PF and ESCC contribution. If you don't pay within due date, it's permanent disallowance. As compared to that, other things like say bonus. So bonus, if you make a provision and if you don't pay by return filing date, it becomes disallowable. But whenever you pay, it becomes allowable. Now what will happen is, when you bifurcate that into these two types, permanent differences are one wherein later on your difference is not going to undergo change. Reversible are those, or other than permanent are those wherein a reverse impact will happen in future. So for example, say there is a X provision which is made, which is allowable on the basis of payment basis as per the Income Tax Act. Bank hasn't paid that. So to that extent, you will be ending up paying higher tax on that particular amount. Next year you pay that, so next year you will pay on the lower side. So the differential which you have paid excess in current year, which is reversible in future year, that is your deferred tax asset. That's your tax asset which is deferred. So you are going to get benefit out of that. So DTA when it is created, it will be a debit side item, that is asset side item. Credit will go to P&L account. Now if you talk about combining these two things with provision, so ultimately it neutralizes your disallowances, because you make a higher provision for the current year which gets compensated by credit in your P&L account. So it's ultimately book profit provision only which you are making if you talk about net thing. So it doesn't give you any additional leverage over your profit or profitability, or it is not even negating on that. Ticklish issues related to that are more about typically BDDR and other instances, because in BDDR income tax restricts allowance up to a particular level based on the methodology which is there in section 36. So any BDDR which is created over and above that, if you reverse that, which is never claimed in your income tax, naturally it will not have any impact on your taxable profits. So let's take a case that suppose I am having 10 crores of BDDR which is created, allowable is only 8 crores. Now 2 crore is disallowable, and because it is disallowable, I am going to end up in paying higher tax on that in the current year. Now let's presume in the next year I reverse it, because I am carrying excess BDDR. That reversal will not become taxable. The reason being, I have never claimed that amount. But if I reverse 3 crores, 1 crore will naturally become taxable because that was something which I have claimed. So in the first year when 2 crores are disallowed, I need to make a DTA on that, under the pretext that it might get reversed. I might improvise on my position. And as and when it gets reversed, it will neutralize it, because DTA detail is a dynamic concept. It will keep on going over the year.
Correct.
So it will be based on the position as on year end. You have to compare with the earlier year's opening position of DTA detail, and net impact will be given in your P&L account. Another common item is fixed asset depreciation, wherein if you are following a different method than income tax method, because income tax method is more than 6 months, less than 6 months, which is an unscientific method which is not supposed to be followed by the bank. Even if you are following the rate which are same, ideally the bankers will go on days basis. That is how many number of days which are there.
Asset put to use.
Yeah, so there the difference will always be there. Now this difference will be also getting reversed in the long run. So at certain cases, it might be that income tax allowance is more and book depreciation is lesser and vice versa. So whatever is the differential that you need to factor in for DTA DTL. And at the end of the tenure, that is at the end of life, it will get neutralized. Now one more angle has been added up now in the recent circular, that now as compared to earlier circulars, the standard asset provisions which were not reversible in earlier years, now they have become reversible. Standard asset provisions were never allowable. But the problem, or I should say the logic behind non-creation of DTA DTL on standard asset was that in standard assets, since they are not reversible, they were presumed to be permanent in nature. The moment I create it, I am not going to reverse it. So once I take a charge on my book profit, there is no scope for me to reverse that charge. But since now RBI has come out with a circular wherein this sentence is absent, one can say that standard asset provision is reversible. So if one reverses that, or one intends or agrees with this principle, DTL DTL can be created on that also.
Standard asset.
Yeah, because it's a temporary difference. It's not a permanent difference. So the crux of DTL DTL is that you need to compare your book profit and tax profit. If the difference is permanent, non-reversible, you don't have to do anything. If it is reversible, you have to do that. One last point is also there. As far as carried forward losses are concerned, carried forward losses are always usable in future because your tax profits can be netted off. And when I'm saying carried forward losses, they are not book losses. They are carried forward tax losses. Now, tax losses, when you want to create DTA out of that, which is logically correct, because ultimately later on your tax liability is going to be reduced. One needs to keep one thing in mind, that there has to be certainty of that. That is, there is a likelihood chance that the bank will enter into profit scenario, taxable profit scenario. It's a ticklish situation. From the banker's angle, no bank can afford to say that my profit will not be earned in future. Banker will always say that there is a certainty. Auditor will say that you have never demonstrated that certainty. You have incurred a loss. So on a conservative basis, I will say that you shouldn't be creating a DTA on that.
Yeah.
Better practice is that, which is indirectly given in accounting standard also, is that whenever the losses are incurred, it's prudent to at least wait for a year when the profits are done, so that it is demonstrated that I am able to use that portion, and then it can be, from DTS angle, you can factor in that.
Sir, thank you so much on the ticklish topic, which are not so easy to understand. But I believe that we are helping banks to understand the issues and the real story behind it. So when you apply your mind to all these concepts, you will not make mistake while finalizing your books. I thank you so much. Keep on watching. There are 2 more series sessions which would be coming up with Dhananjay Gokhale. Very interesting and very forceful. Thank you. Thank you so much for watching.